and welcome to Market Closing on our brand new collab show between Business Today and India Today Television. It's 3 p.m. and we will now get you all the closing action on the markets. First, let's take a look at what's hot in the corporate and the financial space. Sebi holds its board meeting today, and with key changes are expected on F&O expiries, IPO norms and also rules to attract foreign investors. Sebi Chief Tuhin Kanta Pandey will be briefing the media at 6 p.m. on market-moving decisions. Markets extended gains for the 8th straight session, with the Nifty 50 trading above 25,100, up over 100 points, while the sensex has inched closer to 82,000. Defense counters extend gains, with MTAR Tech up 9%, Garden Reach and Astra Micro also up by 7% each. We also have Bharat Dynamics rising 5% and BEL also adding 3% to its trade. Tensions at Tata Trusts over Tata Sons board reappointments. Vijay Singh resigns after 4 trustees oppose his term, highlighting a rift over control of the 27 lakh crore rupees conglomerate. On the final day of subscription, urban companies Shringar House of Mangalsutra and Dev Accelerator are drawing strong investor demand, subscribed 52 times, 30 times and 45 times respectively so far. Let's take a look at how the markets are trading at this last half an hour of trade. First, viewers, we are looking at the Nifty that's holding on to the 8th consecutive day of gains for the markets. 25,100 has been seen on the closing hour as well. So we are still holding up with strong volumes, around 4-10% higher in trade. A lot of sectors that are really pulling up the markets higher. The Nifty Bank that's also hovering higher. You can also see some of the heavyweight sectors like metals, financial services, private banks, pharma and even IT supporting the moves in trade today. But what's also fallen behind is FMCG stocks. That's down by about 7-10%. Some profit booking that's being taken shape there. We're also looking at PSU banks also after 2 days of spectacular rally, seeing some profits being taken off the table as well. On the Nifty, which are the top stocks that are hovering higher, you can clearly see BEL as the top of the chart, 3.5% up move that can be seen on this one. Bajaj Finance, Bajaj Finserv. You also have metal counters like Hindalco that's hovering higher. So a lot of NBFCs that are holding up, a lot of defense names that are holding up and metal stocks that are also hovering higher. On the downside, however, you see names like Eternal, that's the parent company of Zomato, that's down by 2%. HUL, 1.5% lower. Bajaj Auto, IndusInd Bank, Wipro and Trent, these are the top 5 laggards in the trade right now. What's happening on the PSU basket? Well, you do see a lot of defense names flying off the shelf today. BEL, HAL, you also see names like MTR Tech, a lot of other names that are also hovering higher in trade. But it's the right time to invite our guest on board. We have Neeraj Diban, market expert, now joining in to share with us his views on the markets. Neeraj, warm welcome. Good afternoon to you. Your take on the markets. We've been seeing consistent move on the higher side. Second day in a row when we have seen 25,000 being sustained on the closing basis as well. Now about 25,100. So there is a fresh and renewed momentum on the higher side. How do you see the markets?
Yeah, good afternoon. The last few days, post announcement by Infosys for the buyback and then, certain exchange between President Trump and Modi, these are the factors which are associated with the market move. So since then, we've seen some move happening. IT led the rally, which was, one sector which no one was looking at. Everyone was bearish on, and a lot of negatives were priced in. So with this Infosys, buyback boost the whole sector, a lot of ignited, and we saw good moves happening there. And now, defense, metals, because of the inflation data in US and expectation of interest rate cuts, even metals are doing so well. So I feel that because we are above 25,000, a crucial level, which we're not able to cross, now that the market has crossed this level and the market is able to sustain and make this as a base, there's a good chance of the rally, continuing and even mid-cap joining the party, which they've already started. So I feel that this is an important level and the market should do well as far
Market
as,
should do well. All right. Neeraj, hold that thought that I'll be coming to you as far as the key sectors are concerned and where are you seeing opportunities in this market which is improving in sentiment. But let's first of all take a look at what's going to be very important for all the market participants to look at post the market hours today. Remember, market regulator Sebi, that's the Securities and Exchange Board of India, will be holding its board meeting today. And a slew of changes with regards to stock market are expected. What's on the agenda and are there any decisions that are expected to protect the retail investors from the risks of futures and options trading is something that we should try and find out. Joining me is the editor for markets, Shel Bhatnagar, on the program as well. Shel, help us understand. We have been seeing how Sebi has been consistently taking a lot of steps to prevent the retail investors from the risks of F&O trading. What's expected today?
Good afternoon, Sakshi. And I think there'll be a series of steps that the sector regulator will be taking. And they are the following. Of course, these are all source-based. So let's take a dip into them. Firstly, as you know, there have been a lot of efforts already made by Sebi over the last 18 months to curtail the participation of retail investors into F&O. A lot of margins have been raised, and of course the biggest change that has happened is that for many indices the weekly expiries have gone and they are now only on the monthly roll. Now for all weekly expiries, I think there is this step taken will be taken that these weekly expiries will go. So the Nifties on Tuesday and the sensexes on Thursday will shortly we bid goodbye. That is what sources are telling us. And only we will have a monthly expiry, Sakshi, as was the case maybe 12 years ago. So that is one change that is most likely to come in. Secondly, not all retailers will be a part of the F&O market. You will require a hurdle to overcome that. It could be in the form of an exam, it could be in the form of a net worth, it could be in the form of what your bank account is worth about, and only then will you be allowed to participate in the F&O market. Even now, if you open brokerages, brokerage accounts, a new brokerage account, there is always a hurdle now, which means that the F&O participation is not automatic any longer. You have to either provide a net worth certificate, 6 months banking account, and many other details, including your income tax return, for the broker to allow you into F&O. So that is one change. The second change that is most likely is the cash market will receive some positivity from Sebi. Remember, cash was treated as an orphan or a pariah about 6 months ago. So some benefits over there. And I think there is something to make IPOs a little more livelier, a little more better for all those bigger companies who do not want to dilute 25% immediately. So you just might see two steps in that as well. So these are broader steps that Sebi might take to inject fresh blood, more liquidity into the system, and of course keep the retailer out of the F&O segment. We all know, Sakshi, you and I have read that report so many times where 9 out of 10 retailers, when they enter the F&O market, they lose money. So that has to be stopped. The saving rates of the country has gone down. And as you know, there was a step taken to ban even gaming. So these are further steps in the secondary market that will come in. Sakshi.
Absolutely, Shel. Thanks a lot for sharing all those, information with us. This is going to be of extreme importance to today's meeting for sure with respect to what other changes can Sebi be really bringing in. Let's go back across to Neeraj to really take his view. Neeraj, you heard Shel talk about, how a slew of measures could be taken by Sebi by way of protecting the average retail investor at large from the impact of the F&O or the risks that they face at large. Sebi has already come out with a report saying 90% or over 90% of retail investors in F&O tend to lose money. There has already been a lot of change with respect to reducing the volatility in the expiries. Now, Shell points out there could be even a thought. Remember, Tuhin Kanta Pandey had also said that there could be thought process of, reviewing the weekly expiries. What our sources are telling business today is that weekly expiries could completely go away and there could be a monthly expiry into fashion now. How are you looking at that key step?
I think this step was important and was required with the kind of money. A lot of speculation activity has been happening by the retail and investors are losing money. So this is required to be done, whether they move it from a weekly to a fortnightly or totally take out the weekly
Yes.
and only keep the monthly is yet to be seen. But
Hmm.
definitely it'll be a welcome thing because there was unnecessarily casino kind of a trading going, and people were doing zero to zero trades and
Yeah.
losing money unnecessarily, which needed to be stopped. So some steps I think
Absolutely.
had been have are required, and I think they should be
Neeraj, one
coming.
more point that Shell mentioned, and I want to ask you. You know, Shell clearly mentioned that already proceedings to have a demat account open for F&O trading now required the traders to showcase their bank account statements or their net worth. And now there could be also a thought process of F&O traders, those that are looking to trade in F&O should be giving exams. How will this, step be taken in? Do you think this will further curb the participation of retail investors in F&O?
Yeah, I think more than taking a test, maybe there can be some awareness class which they have to take and get certified, because you
Yeah,
don't need the volume to totally take a hit also. So I think
sure.
all these things should come very gradually. They should not be just after this data which came for people losing money is also 1 year old data. So
Yeah.
all of a sudden you should not come in with so many measures. I feel that it should be step by step. First maybe you are going to remove weekly, go to fortnightly, or go to keep monthly, and then have some more regulation on who and how they can
Absolutely.
participate. Should not happen together, and so that the volume get curbed to a very large extent.
Absolutely. Hold that thought there, Neeraj, coming back to you in a bit. But let's also look at another very important news development. In an abrupt move, we've seen Tata Trust's vice chairman, 77-year-old Vijay Singh, who's resigned from the board of Tata Sons. This comes in right a day before the holding company's directors meeting and also right ahead of the upcoming, much anticipated Tata Sons IPO as well. So is there trouble brewing at the Tata Group, and are there differences emerging over the appointment of nominee directors? That's what we'll try to find out now. Krishna Gopalan, executive editor of Business Today, now joins in to share more on the same. Krishna, what has been the reason why Vijay Singh has resigned?
Let's get a couple of things clear here, Sakshi. One, Tata Trust owns about 66% of Tata Sons, the holding company. It straightaway gives them one-third of the board representation as far as Tata Sons is concerned. There's been a bit of a churn at Tata Sons because Ajay Piramal, Rab Smith, and Leo Puri have stepped down.
Yes.
But clearly, the most remarkable development has been the stepping down of Vijay Singh, the nominee from Tata Trust. In all, there were three board members who came in from Tata Trust: Venu Srinivasan, Noel Tata, and Vijay Singh. Now, with the exit of Vijay Singh, obviously it raises more questions and answers in terms of why, because the board meeting that's supposed to be held today is expected to draw the contours of not just the IPO of Tata Sons, but also the way forward for the IPO of Tata Capital. So who's going to replace Vijay Singh is a million-dollar question, but it obviously lends a huge amount of uncertainty in terms of timing more than anything else.
Absolutely. Help us understand why are these, developments happening at this kind of a time? Why is the timing being seen as so critical at this point in time?
Well, some of them actually, I think, came to a point where age was not on their side. Ajay Piramal stepped down, he turned 70. In the case of the trust nominees, the new rule book basically said the contract had to be renewed every year. Vijay Singh is
Yeah.
77. So I think that issue turned out to be a little tricky in the case of Vijay Singh. What eventually led to his exit is obviously is a little unknown, but fundamentally at this point in time for him to step back is what is not adding up. And like I said earlier, if there's been some pressure from other quarters also, but fundamentally the impending IPO of Tata Sons and Tata Capital, this in that context, this really couldn't have come at the worst possible time.
Absolutely. So, Krishna, what is the timeline that they would have to appoint the next person in place of Vijay Singh, and who are the likely contenders there?
The second part is slightly tough to answer. Some of the names are doing the rounds. They've also spoken of possibly looking at an external person coming in, which I'm not too sure will happen because it'll be the first time that a trust company will have an external person. I still would like to believe that someday closer to the trust or with the trust nominee would come in and take that particular position. But that said, it's just not the question of Vijay Singh, but the other nominations, other board positions that also need to be filled. So in all, there are 12 board members, three lie with
Yeah.
the trust, Then you have the exec directors of the group and independent directors. So we really are. There's obviously not a defined timeline right now, but the sooner it happens, the better it is, only for the sake of clarity more than anything else.
Okay, fair point. Thank you so much, Krishna, for giving us all that insight. Keep an eye out on all those developments and the meeting that happens today. Of course, all those developments will be very key to understand from you, as to what comes next with respect to the nominee directors, what's been decided, and of course, who comes in place of Vijay Singh as well will be very important to know, because this comes in right ahead of the big bang Tata Sons IPO that the markets have been very clearly watching out for. Coming back to Neeraj, Neeraj, the Tata Group, how are you looking at the changes that have happened thus far, the performance that has happened thus far as well? Tata Group is something that most of the retail investors trust as core portfolio stocks at this point in time as well. How are you looking at these developments? Will this have an impact, or should one continue to hold on to the core portfolio stocks without worrying too much as to what is really happening on the management side?
See, of course, it is important to keep an eye on what is happening on the management side. But then every company is specifically managed by professionals, whether it's TCS or whether it's Tata Steel. You can see that they're properly managed by professionals. So one should not worry too much, but definitely keep an eye on what is happening. So these things have happened before also, but I think they've been able. They know how important the group is for the capital market, for the country. So they're normally able to overcome these kind of small challenges which keep on coming their way. So I think, and looking at this particular juncture, when there's a possibility then IT stocks should do well. So among the largest company, TCS, is expected to do well going ahead. Their targets have been revised. So one should keep specific stocks and see how they're performing and not worry too much about what is happening on that side.
Okay, you took the name of TCS. I wanted to come to this IT space yet again, because you started by talking about Infosys buyback today, and that's been, some of the momentum driver, factor as far as the last couple of sessions are concerned as well. But all eyes are now on TCS, that after, the biggest ever buyback announcement of Infosys. Meanwhile, viewers, you must know that 18,000 odd crore rupee of a buyback has been announced by Infosys at a price of 1,800 rupees per share, and the entire buyback will be of about 2.4% of the entire equity through the tender route, is what we are given to understand. If you could give us your thought process, Neeraj, there. One, on the buyback, what kind of opportunities does it present to the 26 lakh shareholders at large of Infosys? What should a fresh investor be doing? Should they be buying or selling, the stock ahead of the buyback? And of course, help us also understand what does it mean for other IT companies and large ones like TCS. Will they be under pressure to launch a buyback as well?
See, as far as the sector is concerned, there was definitely a lot of negative news about the sector. But that I think was overplayed. So the stocks had corrected. When Infosys were trading at a very good valuation before this 100 rupees move, which has happened post announcement. TCS also at this price is very attractive. Looking at the long-term valuation, both are very attractive as far as the large cap party is concerned. And I feel that other companies also, there are a lot of companies which are not too exposed to US, had also corrected. So I think there is definitely a case for a accumulation in the sector where one should accumulate the stock. If you're holding for a couple of years, I think these are good entry points, and one should be entering stocks on all dips and accumulating them. And as far as Infosys IPOs, Infosys buyback is concerned, I think some move has already happened. But last time also we saw that the buyback was around 1850, I think 3 years back. So stock did see a decent rally. It went close to those levels, even crossed those levels, I think, after that, if I'm not mistaken. So I think there is still an upside possibility from these levels. If one is buying now, as far as buyback is concerned, not too many of your shares will get accepted. But generally, looking at the valuation, you may get an up move in the IT space, and Infosys can also, give a decent return in the medium to long term.
Okay, let's talk about some of the other sectors, especially the ones that are buzzing in trade today. Let's start off with the defense move. After a long haul of being in a consolidative space, the entire space is in the buzz today. Look at the Nifty India Defense Index. It's up by 4%. That's the kind of move that is being seen on the index level. Below that, when you look at the incumbents, some of the stocks are up over 12% as well in trade today. BDL, look at Astra Microwave, look at a BEL for that matter, BEML. A lot of these stocks are actually buzzing in trade trade today. Even the shipbuilders like GRSE, Cochin Shipyard, they're all up and about in trade today. What's the key reason? There are several news flows that are leading to this sharp momentum across the space. So look at an MTAR Tech. It's rallied about 12% in trade today, crossed over that 1700 mark as well. This is largely on the back of winning of orders of $43.8 million, approximately 386 crore rupees from Bloom Energy Corporation. It's still up about 9% in trade. BEML, we've seen the government, there are some reports that are suggesting that the government may be looking at a proposal to upgrade the company from a mini Ratna to a Navratna, giving it greater financial freedom as well. And therefore, you're seeing BML shares also rally by almost 8%. Look at a GRSE, for instance, 8% higher is what it went to in the day's trade. And we've actually seen the company also in focus because of the record date for determining the eligibility of the shareholders is set to receive a dividend of 4.9 rupees as well. So that's also keeping the stock in focus. Similarly, we're also looking at Astra Micro, Paras. All of them move up in substantial amounts in trade today. Let's find out whether there's a fresh wave of defense rally that's taking place from now onwards, and should you be really looking at that as well? Neeraj, what is your thought process when it comes to the defense stocks? Retail investors at large have really put in their focus on the defense and railway pack from the last couple of years. They've had periodic movement of sharp wealth creation as well, but the stocks have been in a consolidative zone for a fairly long time now. What's your fresh outlook here?
As far as defense is concerned, we saw a good rally last year. Then post-October till January, February, you saw a decent correction. And then because of the India-Pakistan clashes, the stocks really went up, and the valuation concern was there. And you saw a correction happening, post-July. I think defense stock, as per my view, is that they are good long-term bets. If one is a long-term investor, you should be using the dips or the opportunity that come to buy into those stocks. If someone buys today after the rally, there may be consolidation phase, there may be some correction, but you need to keep them for a long haul because they're going to give you decent return. One thing is clear that the spending on defense is going up, and it will go up further. And we already have a 5-year plan by the government where they've given a huge plan for defense outlay, defense spending. So I think that the companies, you have to select the good companies there and use the opportunity that happened because of valuation concern, those corrections to accumulate those stocks, which you had one opportunity just few days back also, but now they've already started moving from those levels, and some stocks are already up 5 to 10% to 15% in the last few days.
Right. In fact, Neeraj, we also have a viewer query on the defense stocks. Rakesh Rana from Pune writes in and says, I'm looking to invest in defense stocks, but I want to know, is this the start of another bull run in the sector? What would you say?
I would say that the bull run had already started some time back. So there will be periods of up and down corrections, consolidation. But if you're a long-term investor, even if you enter today and hold for 2 to 3 years, you'll make money. So short-term, it's very difficult to say because short-term valuation concerns come, some profit taking will come. But invest today, go with the good big stock, the ones which are really proven themselves on execution, because execution is very important as far as defense is concerned. So if you are a long-term investor, you can enter today also.
Long-term investors can enter even at this stage in time. Let's take another viewer query that we have. This is from Mahesh Choksi. He's from Bhopal, and he says, I'm planning to invest in auto stocks, sir, but I want to know between two-wheelers and four-wheelers, which segments actually offer better potential at this point in time. All right, we'll definitely get you, Mahesh, a view from Neeraj. But Neeraj also put it in context that the GST benefits are set to accrue from September 22nd. We are hoping for a big boost in this upcoming festive season on the back of price cuts that most of the companies have announced. So how should one choose between two-wheelers and four-wheelers in terms of investments?
See, I was very positive on two-wheelers. Stocks like TVS are portfolio stocks which have done well and they'll continue doing well over a longer term period. And, their stocks have moved up. So Bajaj Auto and Hero were among my top picks because of valuation. But like Bajaj Auto has also moved up by 1,000 rupees. Hero has also moved up by 600-700 rupees. But I think that two-wheelers still have an upside potential because of good monsoon. I think rural demand can pick up with GST cuts also happening. And the interest rates are also low. So interest rates are not going to go up in a hurry. So I think two-wheeler space can give you a better return as far if you're looking at a 1.5 years period. But over the long term, stocks like Mahindra and Mahindra or stocks like Maruti also have a good potential.
Okay, fair point. Neeraj, hold that thought there. It's 3:30. Let me just wrap up the markets for all our viewers to see. So we've ended above the 25,100 mark on the Nifty viewers, 0.4% higher in trade. This is the 8th consecutive session of move on the higher side for the Nifty. And with Friday's close, we have marked up 2 consecutive weeks of gains also on the markets as well. This week, of course, a lot of move was also led by the IT sector, auto sectors, as well as consumer durable sectors that continued to move up in trade on the back of the GST news flows that came in. But let's quickly start to wrap up. The Nifty Bank ends with about 0.2% gains on the higher end. You have 54,800 on the Nifty Bank as well. Metals were the top losers today with 0.8% higher move. Small caps and mid caps, in fact, also did very well in trade today, especially the small caps that outperformed all the other major indices with 6-10% kind of a move that we actually saw there. But metals, financial services, autos, private banks, pharma stocks, these were the ones that continued to rally in trade. What saw some profit taking? We saw FMCG, the fast moving consumer goods that fell behind in trade, almost a 7-10% loss there. Look at the PSU banks that also saw profit taking from last 2 days of a move on the higher end. India VIX, which is a volatility index that reflects fear gauge in the markets, or how much fear is there in the markets, that actually slipped. That actually indicated more confidence in the uptrend in the market. So 2% lower for the India VIX. Let's actually look at the top movers on the Nifty towards the end of the session. You have BEL, that's Bharat Electronics, ending with 3.6% move on the higher end. Bajaj Finance, Bajaj Finserv also moved up. We also saw names like Hindalco and Shriram Finance among the top movers. Top stocks that dragged in trade today. 2% lower for Eternal, it's the top loser. The top loser, that means, which is the parent company of Zomato. HUL, we also saw Trent from the retail space. Trent, remember, is a company that operates Zudio and Westside as well. Again, from the Tata Group. IndusInd Bank, Bajaj Auto, these are the other stocks that fell back in trade as well. Let me look at some of the absolute performance from the Nifty 500 basket today. You had names like JBM Auto, Sigachi Industries. You also had Gujarat Mineral Development Corporation that was up in trade. I marked out a lot of defense stocks, so GRSE is also among those. That's up 9.5%. MTR Tech and BEM. These are all the stocks that moved up in trade. Coming back to Neeraj. Neeraj, help us understand with a view for the next week. Do you think we will be hoping for another third consecutive week of gains as well? Remember, the next week also has 2 important data points that we will be looking at as Indian markets and domestic markets. One will be the US Federal Reserve and their rate decision as well. That's likely to have an impact on the global sentiments as far as the markets are concerned. And of course, there are constant sentiment updates that are coming in from the US that there could be negotiations that could continue on the trade tariff front next week as well. How are you looking at these developments by way of how could the markets react?
See, what is important is that this last few days have been good, and actually yesterday and today's closing is very important. We've been able to close about 25,000, a crucial level, for 2 days in a row. So I think if market is closing at these levels, I think mid cap should join the party from next week. So my expectation is that mid and small cap stocks should do well in the coming week. As far as the broader market is concerned, or the large caps are concerned, definitely the news flows will be important. So as far as the interest rate in US is concerned, I don't think people will be disappointed. There should be interest rate cut. It's a matter of, we have to see whether it's 0.25 or 0.5, but a cut should definitely come. So the second thing is about the US, the trade tariffs and what is going to happen with them. I think nothing may happen in the next week. Again, it may happen over the next 1 month, 1.5. But any news flow there will definitely keep the market, on a standby as far as those sectors are concerned, which are totally dependent on exports, whether it's textile, gem and jewelry, aquaculture. I think those specific sectors will have a wait and see how things will happen there.
All right. Okay, Neeraj. Thank you so much then for being with us on the program and helping us out with your insights on the markets as well. Good pleasure with speaking to you, and of course we'll be getting you soon on another edition of Business Today as well. Viewers, it's a wrap on the Business Today show for now. But your queries on mutual funds, on markets, and on your portfolio as well, on the number that's flashing on your screens, and you can also send your queries on our social media handles as well. And don't miss the market opening show on Monday morning at 9 a.m. with Bakaya that will give you the first word on everything that will move the market. Stay tuned and have a happy weekend.